Right, what is good, guys? How is everyone doing? Good morning, good afternoon, good evening. OBS, my streaming software, is saying that there's skipping frames. I'm not too sure what that means, but if it's lagging or something, or there's something going on, it looks shit, let me know. But yeah. I've literally just closed this trade. Literally just closed it. Literally, like, 4 minutes ago. For fuck's sake. Good morning, guys. How are we all doing? Ready to make some moolah, some money. First, we're going to start with the fundamentals. So what has actually happened on GJ this morning? If we just go over to GJ. Good evening. So you can see we had a massive leg down this morning. Around about 7 o'clock this morning, we had a massive leg down. That was directly correlated with or caused by GBP CPI at 7 a.m. this morning. 1 hour before London Open, we had CPI, and it was bad. A lot worse than expected. So yeah, we kind of melted to the downside. But yeah, you know, oh shit. If you're new here, don't forget to like the stream up, join the free Discord, which is the first link in the description. In there, you can find market outlooks and a free course where I show you a slightly in-depth guide on how I trade. You'll learn fair value gaps, liquidity, all that stuff. And remember, I am live every single day at 2:30 p.m. BST, which is New York Open, every single day without fail, unless it's a bank holiday or a weekend. So we're going to start off on Bitcoin, simply just because I was in a trade. I literally just about got out like 5 minutes ago. I closed break even. I made like 46 bucks, 46 pound, whatever it is, in profit, basically break even. So what has happened here? So we obviously accumulated. We took out this liquidity up here, which we were waiting for in the course chat. There's a few guys waiting for that. And then we came up into this fair value gap. I think it's an inverted fair value gap from yesterday, or the day, not from yesterday, from like weeks ago, for fuck's sake. But we respected that, came down, and then as we were starting to invert this fair value gap, I got in, literally here. I got in here as we were coming into this fair value gap, or it might have been here. I got in at this level here. Then I was looking for sells, obviously targeting here, looking to, if we just drag this to the right, you can see we did melt to the downside. So I was looking at this as a management spot. And then I was looking for this as a management spot as well, because we have a fair value gap here. And I could respect this, and it would still make sense in terms of AMD. It would still make sense to distribute up. And then obviously, ultimately, my full TP was down here. But what actually happened was we slowly invert the fair value gap. You know, we really didn't want to. If you watch this price action, we were just up and down, up and down, up and down, up and down inside every candle. And then when we started, you know, we respected it, and that gave me a bit of confidence. But then we started trying to come back into it, which, you know, withdrew that confidence. I have originally put my stop loss up here, and then when we formed this fair value gap, when we finished forming this fair value gap, inverting this fair value gap, sorry, I got my stop loss just above here, which is just above this mini fair value gap here as well. So I put my stop loss there. I was risking about 0.25% ultimately once I'd adjusted my stop loss. Then when we started pushing back up into this fair value gap, and, you know, we flipped a few times as well. Like, we respected, if we go to the 5 minute, you can see we pushed down, and then we started, you know, pushing straight back up, leading up to 2:30. So I got out like 5-10 minutes ago, just before the stream started. I got out, and then obviously it seems like it was an alright decision. We haven't really done much since. We have wicked down, took out this, and melted straight back up. But yeah, that's that trade. Basically break even, like a little bit of profit, but doesn't really matter. We're going to obviously leave it like this, see how it's going to play out. Obviously, I'm expecting AMD. I'm expecting a distribution to the downside, which we're going to get into now. If we go to the 1 hour time frame, you can see we have a nice accumulation. And this came right after the trade that I took, where we had an accumulation here. If we draw this out, we had a nice accumulation around about here. Manipulated up, came down, took this, then came back up in the X phase. then it started accumulating nicely, manipulated, took out this liquidity, came into this fair value gap, respected this fair value gap, flipped, formed a nice candlestick pattern around about here, and then I took my entry just after that. Then I got out when we started trying to respect that fair value gap I was looking to invert. So that's Bitcoin. We're still expecting a distribution. I'm still going to wait. In terms of another trade, I'm going to wait for the next accumulation. As always, we'll see what has happened. We'll analyze what's happened once it's played out. If it goes up to my stop loss, we'll look at what's happened and if it was the right move to make. If we come down to the take profit distribution, we'll see why that happened, if it was the right decision to close it early, all that stuff. But yeah, moving on to GJ. And actually, I just want to cover the fundamentals quickly. There's nothing to worry about for the rest of the day. Just to get that out there, we don't have to worry about anything else. We've had the big piece of news, which is GBP CPI. That has melted to the downside, causing a massive leg down, which I want to get into now, because if we go to the weekly time frame, we have actually created that wick on the weekly time frame now. This is really fucked up, this candle. Fuck. Yeah, anyway. This time yesterday, we did not have a wick on the daily candle, but now we do. Which means we're not as guaranteed to move down. What I wanted to see was, regardless of all these candles, just think of it like this. So I wanted to see price come up, take out this liquidity here after accumulating on the daily time frame, then come down and make the wick, and it'll be like some form of high time frame AMD, and then we can obviously catch it and move to the bottom of the weekly range. But now, what I wanted to see specifically was taking liquidity, then forming the bottom wick, because we take liquidity, which is bearish, and then we don't have a bottom wick, which is a bearish sign. So now we have the bottom wick. When we take liquidity, we're not as guaranteed to come down all the way down and make that bottom wick. Obviously, we could still do that, and we're still going to try and catch that, but it's not as strong as a trade as I would like it to be. But it still meets my plan. We've got the context based on, if we enter the trade, we will have the candlestick pattern, the manipulations to the upside on the daily, all of that stuff. So we are still good to take the trade, but it's not as good as I wanted it to be. Sorry, I'm a little bit ill. I caught something. I'm not too sure what it is, but it doesn't feel nice. So that's the weekly. That's the daily. That's what happened on GBP JPY. Now, what's going on the 15-minute? So on the 15-minute, you can see we have a nice accumulation here, manipulation to the upside, taking out all of this. Then, this was leading up to news. Then news came out, and we had a nice distribution to the downside with a nice cool-off following, like a little retracement, cooling off period, which we usually get, the gap in between the distribution and the accumulation. Then, now we are in an accumulation. So I've seen this accumulation, I was like, okay, where are we going to manipulate into? Where are the potential areas to manipulate into? So there's two areas, really. There is this fair value gap here, which we have already respected, but it still stands quite valid. And then there's obviously this one up here. What I'm going to do is I'm just going to get rid of this 4-hour fair value gap. We don't need this. We can get rid of this 4-hour liquidity as well. We don't need that. So what I'm looking to do is manipulate into one of these two fair value gaps. We either manipulate up into here, then come down, or we manipulate down to here, then go up. It is literally as simple as that. You know exactly what I'm looking for. I don't think I even need to say it, do I really? We manipulate into a fair value gap, we manipulate into a high time frame fair value gap, look for a candlestick pattern, and then take that trade. It's as literally as simple as that. Now, what I'm expecting price to do, what I would prefer to see is price going down first, manipulating down and distributing to the upside. And then what we can do is we can target, obviously, this area up here. But what I'm going to do is I'm going to have a full TP. If this plays out like this, yeah, what I want to do is, I'm probably getting around about here somewhere. I'll put my full TP up here, and then these are going to be the management spots. So obviously my stop loss is going to be below this low, just here. Management spots where we're going to manage the trade. Obviously, the other side of this, the accumulation. Second is going to be this fair value gap here. Third is just going to be this liquidity over here, and then between this liquidity and this liquidity, we're just going to be holding it and seeing how it plays out. But make sure you like the stream, guys. It really does help me out. It takes like 2 seconds. The YouTube business, hate to ask, but it's got to be done. These streams are free. So, but yeah, that is literally like as simple as it gets. Unfortunately, we have made the bottom wick on the weekly candle, which, won't give us as strong a confidence to take the trade as I would have liked to see, if we do end up taking the sell positions from the daily liquidity. But because I'm still targeting that daily liquidity before we move down, there's a lot to say we're going to move down. We've recapped. We don't need to recap it really, but we can if you want. So we're respecting the monthly. We're in the monthly premium, daily accumulation manipulation to the upside, daily liquidity ready to be took, weekly fair value gaps. I've said this like every day for weeks now, like about why I'm bearish. But before we have that bearish move down, I do think we will take the daily liquidity. So what I'm expecting price to do, this is why I'm looking for buys in a bearish zone, is because I'm expecting price to just, relative to the time frame, just have a little retracement back up, take out the daily liquidity, then melt to the downside. So we're looking at potentially like back-to-back trades almost. So we take a nice buy position if this plays out how I wanted to. We take a buy position up to the top of this daily liquidity. Once we take profit at the daily liquidity, we look for a candlestick pattern, preferably on the 1 hour, the 4 hour, because it's all the daily and higher time frame stuff that's playing out there. If we can align the 15-minute AMD cycle, that would be great. Like maybe if we distribute up to here, accumulate, then manipulate up and distribute to the downside on the 15, then that can translate to the 1 hour, the 4 hour, the daily, and ultimately the weekly, where we can look to target the other side of the weekly range. So it's all still, it's still in plan. We've got a little bit of a confluence taken away from us, which was that bottom wick being formed. But we can still look to take a nice trade to the upside, targeting the daily liquidity. Then when we take the daily liquidity, we can look to take sells to the downside, targeting the bottom of the weekly range, or the sell side liquidity on the accumulation on the weekly time frame. Cheers, bro. Happy I can help. Hey, Rodrigo, how's it going? Afternoon, Dan. Good morning, Bilk and Rose and Abla. Hope everyone enjoyed that analysis. Don't forget to like the stream, guys. It really does help me out. I hate to ask. I'm sorry. I am going on a little bit, but it does help. Now we're moving on to Bitcoin, and Bitcoin has done exactly what I wanted it to do. About 20 minutes late, for fuck's sake. But it is what it is. It is what it is. I made the right decision in the moment. We're starting to respect the fair value gap, so I just kind of decided to close the trade. Good morning. And now we are melting to the downside. I think, Dan, you were looking at this, weren't you? Are you in this trade, Dan? Are you in this trade? Yo, good morning. Yeah, we were looking at this, weren't we? Targeting down here. Unfortunately, oh my fucking days. Jesus Christ. BBC. Big black candles. I don't know why I said that. But unfortunately, we're going to the downside. A bit late. Bitcoin, come on, bit late. But it is what it is. Curse you, Pepperstone. Right, so we're going to look at gold now. Bitcoin's doing its thing. GJ's doing its thing. We're looking for manipulation to the downside on GJ. Bitcoin is obviously just still in that move. Going to the 4 hour time frame. So gold, the trade would have played out here as well. What I was looking at was, I think we discussed this a few times already in the past week or so. But what I was looking for was accumulation here. You literally seen all of this playing out. I think I even told you about this accumulation. I was like, okay, I'm going to expect a manipulation into this fair value gap. And that's like over here. Like this was on Friday a couple of weeks ago, like 2 o'clock Friday. I was telling you, we're going to manipulate down to here next week. Then we did that. We formed a candlestick pattern. I took a buy. I was targeting this area up here. I did ultimately close here, but it still would have played out. So note to self, like in my journal, I'm going to be writing down, try and hold the trades longer. I think one issue that I actually wanted to cover, guys, like this isn't really trading related for you, I guess, but one thing I wanted to cover is there really is a difference between being profitable as a trader on your own and being profitable as a teacher. I don't know what you want to call me, but being profitable as like a, I don't want to say mentor because it's kind of gay, but you know what I mean. Like some guy who teaches you how to trade. Trading in front of people is a lot different to trading on your own. So I'm still getting used to that. Like I personally would have held this trade a lot longer. I would have held it on my own because, you know, there's no pressure when you're trading in front of people. Like, I'm not going to be brutally honest. Like, it is a lot different. Obviously, it is executing the same strategy, but there is a little bit more of a psychology game to it because there's a lot there. But what I'm saying is, I should have held this trade a bit more. Same with Bitcoin as well. You can see it back to back here. Gold and Bitcoin are closed too early. Well, Bitcoin hasn't hit take profit yet, but it's fucking gonna, isn't it? But yeah, gold, we're looking for a accumulation on the 4-hour time frame. Again, same cycle. We might come back down to the we might even continue up, to be honest. But to take a trade on gold, what we'd want to see next is that accumulation move. If I just draw that out now. So if we're going to take a trade, we need to just form a little bit of structure, consolidate a little bit, and then, you know, we can trade from there. But exactly what I said happened. You've seen me talking about this weeks ago. Go back to like the start of October and look at my gold analysis. I was telling you we're accumulating. We're going to manipulate down. We manipulated down. I took the trade and we distributed up exactly how I planned when we were all the way over here. But what we can do now, because that's played out, we can actually just get rid of all this. We don't need it. And this. And this. A little bit drawings as well. I do like to draw on the chart. What we're going to do is we're going to draw a couple fair value gaps just to keep an eye on. There's one here. Now, if we continue up a little bit, start consolidating, that'll be a nice area to look for a manipulation down into. And a nice area to look to distribute to as well, to be honest. Because gold is extremely, extremely bullish. There's also this fair value gap here, which we inverted and haven't actually came back and respected yet. As you can see, we haven't come back and respected that. So I'm going to get rid of this one now because this is our structure. This is what we're looking for. Like, this is like the bottom. This is what we'll be looking to bottom to hold price up. We don't really need this down here yet unless price breaks this one. But that's what I'm looking for on gold. We're waiting for that next accumulation, and then we can start, you know, identifying a potential manipulation zone, which will obviously be a fair value gap. USD JPY, what is going on here? As I said, I've said this multiple times. I don't know why I keep repeating myself, but, you know, obviously there's new people here. When distribution reaches the other side of the accumulation range, it does not need to go any further. It doesn't need to. It's done its job. When it's up here, when we're looking at manipulation up here, it does need to go down to here when we're looking at the distribution move. It does need to go there to take that liquidity before we do anything else. But once it's took the other side of the liquidity zone, once it's took the other side of the accumulation range, it does not need to go any further. And this is a perfect example. Now, sometimes you can catch the move all the way down to here. Like, I was targeting this area. I wasn't in the trade. I didn't take a trade. I didn't trade USD JPY. But I was looking for distribution to end around about here, maybe. There's a lot of confluences to suggest that. But as I said, it doesn't need to do that. And look what it's done. Straight after distributing, it has gone to a consolidation. If we just draw that out now, you can see a nice accumulation range. That doesn't look like a consolidation, but on a lower time frame, I think that's where we identified it. But what we can do is, you know, we can get rid of this, get rid of this. I don't know why my fair value gap here is blue. Get rid of that as well. We took this liquidity, and we've also took this liquidity as well. Expected a bullish retracement, which we got, and started consolidating. Get rid of that as well. But now we are accumulating. We are looking for a manipulation zone, look somewhere to manipulate into. Now, there's not really much because, you know, all the fair value gaps we've come back into. We have took this liquidity, so we can expect a move to the downside. So we are still bearish, looking for sales on this. As you can see, we took liquidity a few times here and here. If we go back to the 4-hour time frame, that means we'd be looking for a manipulation to the upside and a distribution to the downside. So if we draw out a fair value gap here, you can see that right there. What we'd be looking for is, because we are bearish, because we are looking for sales, we're looking for a manipulation to the upside, which means we only want to look for bearish or bullish and fair value gaps. So, manipulating to this, form a candlestick pattern on this time frame, maybe the 1 hour, even if you want to be a bit cheeky. Then, obviously, Once we've done that, catch a move to the downside. You could either go to the bottom of this range or target this range over here like we were doing beforehand. But that's what I'm looking for on USD JPY. On New Zealand JPY, I don't know why that's there. I don't trade that. I think someone was looking for sells, and it ended up playing out because we didn't have a bottom wick on the 4-hour time frame. We came down and made that, and obviously continued down to exactly where I said we would go to for the distribution. See that? Perfect. This is literally a perfect example of how I trade. Accumulation, manipulation to the upside into a fair value gap right over here. Form a candlestick pattern. Take the sell position from here. Target this area as an area to manage your trade. Then, if there's any fair value gaps in between that and price, do that. Ultimate TP was down here, hence the black line. That's the liquidity I was targeting, hoping to be took. We swept that liquidity, or grabbed that liquidity, in fact. So that is a perfect example of how I trade. We got the accumulation, manipulation to the upside into a fair value gap. Then we form a candlestick pattern, move to the downside, targeting the liquidity ultimately. And look how good that take profit and entry placement is. 0 drawdown and 0 lost profits. But what I mean by lost profits is if price continued to go down, we would have lost a few profits there because obviously we could have got a bit further. But perfect, perfect, perfect. But I don't trade that. But the guy who was asking about that, I think it was Bilk, actually, if you're still here. Right, AUD USD, we are still looking to fill this gap. We have to come and fill this gap at some point, so this makes sense to be a manipulation to the downside. I was looking for a manipulation to the upside whilst we were inside of here, but it still makes perfect sense if we just draw this out. What we can do is we can look for a fair value gap now on the lower time frames. If we just go to the left-hand side, there should be something there, and there is. Spot on, already spotted. One sec down. Yeah, it was manipulating into a fair value gap. This here. We had a fair value gap here, which we hadn't actually come back and respected yet. This one here. And as you can see, we haven't come back into that one, so we were still looking to respect it, and we did. So we did come into a fair value gap. I haven't seen that message, though. I'll have a look after the stream. But, yeah, we have come into a fair value gap, as well as liquidity. So it was actually like almost a grade A setup. Right, USD CAD, I don't trade that. What was I on about? Oh yeah, AUD USD. On the 4-hour time frame, I was expecting a manipulation to the upside, but we got a manipulation to the downside into this fair value gap, which we have respected once, but as I said, FVG is S and R. Fair value gaps are support and resistance. So we can trust this to be respected. It's not as strong a confluence as you would like, but you can still expect it to respect this fair value gap. So, what we want to see, I don't even need to say it really, do I? We just come into here, candlestick pattern, target here, manage somewhere. How about here if there's a fair value gap? Simple stuff. Literally doesn't get easier. All you got to do is wait. I think the hardest part about this strategy is actually having the patience to wait for these setups. Some people just like taking trades. Some people just like gambling. But if you can understand that patience is key, everything will become a lot easier to you. No worries. Don't worry about it. So, you know, GJ, manipulate down, distribute up. Bitcoin, still hasn't hit take profit, but unfortunately I missed these profits. I closed with like £60. I probably would have over 2% now. Or this would be 2%, I'm not sure. But, you know, Bitcoin. If you want to take a Bitcoin trade, as always, just wait for the next accumulation. That's the best thing to do. Wait for that. Wait for manipulation. Wait for the candlestick pattern. Boom. Take the trade. Simple as that. Don't try and catch this move if you've missed it. Just make sure you don't miss the next one. Simple as that. Gold, we're waiting for a high time frame accumulation. We have we just done that? No, we've been doing that for a while, but 4 hour, we're waiting for a manipulation, an accumulation, USD JPY, waiting for a manipulation, AUD USD, waiting for a candlestick pattern, USD CAD, don't know why that's there. So yeah, that's what we're looking at today, guys. That's like as simple as it gets. If you're new here, make sure you join the free Discord. There's more in-depth guides on how I trade, on liquidity, fair value gaps, obviously all the other shit, AMD as well, candlestick patterns, blah, blah, blah. And there's a good lecture actually on risk-to-reward ratios and why they do not matter. And I'm actually, why not? Why the fuck not? First of all, I'm plugging the free Discord. Join the free Discord if you haven't yet. It's fucking sick. But what I want to talk about is why risk-to-reward ratios do not matter. So think about this, right? We're going to start off with Elon Musk. Now, that should not make any sense to you yet, because why the fuck would I talk about Elon Musk in this? But Elon Musk, right, his daily routine. You know, there's a lot of videos online where it's like, follow this daily routine to become a millionaire. Day in the life of a millionaire. Daily routine of a millionaire trader. Day in the life of a millionaire. Day in the life of a potential billionaire. Whatever the fuck it is. There's so many day in the life videos of what people are doing now that they're millionaires. And that is completely wrong, okay? Why is that wrong, and why does this relate to risk-reward ratios? Hold on. Give me a minute. But think about this, right? What Elon Musk does on a daily basis, what does he do? His sleep schedule, I think, is fucked, actually. He stays up very late. But his daily routine is the daily routine of a billionaire. Now, if you're trying to become a billionaire, some people will be like, okay, I'm going to do what the billionaire is doing. But that doesn't make any sense, because he hasn't been doing that all his life. You need to copy what Elon Musk did to become a billionaire, not what he does now that he is a billionaire. Does that make sense? Now apply it to risk reward ratios. You see traders catching 5R, 4R, 10R, maybe high R trades. You see traders catching high R trades. You see people like me on TikTok, Instagram, YouTube catching high R trades, but that's because they're profitable. So beginner traders trying to catch high R trades, what it does is it causes a lot of bad habits. So there's the bad habit of obviously adjusting your stop loss when you shouldn't be, adjusting your take profit and stuff like that. And that is the key thing, what I'm getting at here. You see my trades where my take profit is 9 times out of 10 spot on. Like the entry on Bitcoin and exit on gold and whatever was a bit off, but the take profit was perfect. The actual take profit on the example I've just shown you on like the New Zealand JPY or something, the example on gold, the example on Bitcoin yesterday, my take profit placement is on point. How do I do that? Well, as a beginner trader, you should not worry about your R. Why is that? Because you see profitable traders, you see mentors, you see these people on TikTok, Instagram, whatever it is, trading high R trades, catching high R trades, using this strategy. This is what they do on a daily basis. You're trying to learn what they are doing now that they are profitable, not what they did to get profitable. Does that make sense? Now apply it to the Elon Musk thing. If you did what Elon Musk did on a daily basis, you would not be a billionaire. If you did exactly what Elon Musk did to become a billionaire, you probably would become a billionaire. So you've got to do exactly what I did to become profitable, not exactly what I'm doing now that I am profitable. Does that make sense? So what I want you to do, stop worrying about your risk to reward ratios. How do you do that? Well, first of all, you need to be honest with yourself. Like that's probably the only way, really. You have to be brutally and truthfully honest with yourself. Like, you can lie to me and say, this is where I thought it was going to go, completely unbiased. And then I looked at my R. But you need to be honest with yourself. That's where it starts, really. Now, what you can do is, a good trick is, like, let's say we were going to get into a trade here now, guys. Yeah, let's say we were going to get into a trade. So let's say prices come down, formed a nice candlestick pattern here, and we're going to get into a trade. First things first, without drawing the chart, like without drawing the entry tool, like this little thing here, without drawing this out, what we're going to do is we're just going to draw lines. So where do I want to target? Okay, let's target here. Let's put my take profit here. Where's my stop loss going to be? My stop loss is going to be here. Now, do this. Yeah. Let's say the R is like 0.3. Let's say this is what's going on. You enter up here, you take profits here, and your stop loss is down here. Some people will see that and be like, oh, I can't trade a negative R. So what I'm going to do is I'm going to put my stop loss all the way up here. And now I've got a nice R of 2.5. Get in. This is what profitable traders do. That is not what you need to be doing. What you need to do is trade like this. Who fucking cares if you make 0.3% on a demo account? It doesn't matter. Like, it's a demo account. So focus on the risk, focus on the stop loss and the take profit placement. yeah, and then draw the chart. That way, you will have a completely unbiased decision, because what you could do is you could place the chart pattern down, the entry pattern thing. You can place that down and be like, okay, I'm going to put my take profit here and my stop loss is going to go here. But actually, that's only a 1R. I want to go for 2R because the guy I seen on YouTube who's profitable and has been trading for 5 years, he goes for 2R trades. So what I'm going to do is I'm just going to put my take profit up here. And what will happen is price will go up, go to your original take profit. You're like, yes, get in. It's going up here. Let's go. I might even just extend it now because why not? Because it's clearly going to keep going up. And then it'll just go down straight to your stop loss. Something like that. Why is that? That's because you don't have good take profit placements because you're relying on the R, not the take profit. So first things first, as a beginner trader, don't fucking care about your risk to reward ratios. Just focus on the take profit and the stop loss. It does not matter if you're right or wrong. This is why journaling trades come into it. So let's say your take profit was here and your stop loss was here. Yeah. And what price does is it goes to this area, hits your take profit, and then continues up. You can be like, okay, price continued up after it hit my take profit. What do I do? Why did that happen? Let's see why that happened. Journal the trade. Be like, okay, I could have took more profits because I was targeting internal liquidity instead of external liquidity. Something like that. Or you could ask me, all that shit. You know what to do. Figure out the answers. But you need to be making the questions. So you need to be journaling the trade, seeing where you're going wrong, seeing where you could be improving. And that's how you figure out what the questions are. Then you can answer them by asking me or just doing your own research. And then once you've done that enough times, once you've, like, without any bias, without any, bias for your risk to reward ratio, once you've practiced good stop loss and take profit placement, and the way you do that is by when price hits your take profit, it doesn't continue up or down. When hit price hits your stop loss, it continues up or down. But once you've done that enough times and you've got, you may be taking an average of like 0.7R trades, but your take profit and stop loss placement is great. What you'll notice is a few trades will be 1R, 1.5R, some might even be 2R. So what you do then is, once you know you have good take profit and stop loss placement, but your risk to reward ratio is a mess, so it's like 0.3 here, 1R there, 2R there, 0.1 there, 0.6 there, when it's all over the place, what you can do is you can just withdraw from the R. So don't just automatically start going for 2R trades. So be like, okay, my take profit placement is great. So what I'm going to start doing now is extending my take profit to go for 2R trades, or tightening my stop loss to go for 4R trades. What you then do, once you know you have good take profit and stop loss placement, is then just withdraw from the low R trades. So instead of taking 20 trades a day, 5 of them being 0.6 and 5 of them being 2R, just go down to 5 trades a day, 5 of them being 2R. Withdraw from the low R trades. Don't go for the high R trades. Does that make sense? Withdraw from the low after you've mastered take profit and stop loss placement. And the issue with this is, I know I'm rambling on a bit here now, guys, but the issue with this, right, is you'll see, relating back to the Elon Musk thing, you'll see me going for high R trades or whatever it is, and you'll try and go for high R trades, and it will take you longer to get profitable because you don't have good take profit and stop loss placement, because you're completely relying on the risk to reward ratio. So there is a more in-depth guide on that in the free Discord, in the free course, which is in the free Discord. There's a more in-depth guide on why you don't need to use risk to reward ratios yet as a beginner, and then what to do once you've started winning trades. But if you want to check out more of that, more in-depth guide to psychology as a whole, you know where to go. It's Fast Track Trading, second link in the description. But is it possible to take a quick look at platinum? Yes, I will. I think you said something about this, didn't you? About platinum respecting AMD quite nicely. And it does seem to be. It does seem to be respecting it very nicely. Now, there's a couple AD here, like one right here. Stands out to me. Sorry, distribution. I've just dropped the gem, by the way. If you won't listen to that, it's your own fault. But now we're X, so we're looking for a nice consolidation after this, preferably now, because we've just been bouncing around a little bit. That's what we want to look for next. But it does seem to play out quite nicely. We've got a nice accumulation, manipulation, distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution, accumulation, manipulation, distribution. This does seem to be playing out quite nicely. Accumulation, manipulation, distribution, accumulation, distribution. As I said, there are a couple of distributions here. Accumulation, distribution, accumulation, distribution, you know. Well, I guess you could call that accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. So it does seem to be playing out quite nicely. What you want to look for next is an accumulation, but I'm not going to be trading platinum, I don't think, ever. But if it works, you know, go ahead. But that's what you want to look for next. In terms of areas to manipulate into, what is there? There's this fair value gap over here, which stands out to me, which we have respected, sorry, a couple times. That'll be a nice target for your manipulation. Then there's also this fair value gap down here, which hasn't been respected, I don't think. Just kind of wicked the outside of it. So they're the two areas you want to look to manipulate into. So let me just go to these boxes, and this should make it a little bit more clearer for you. Oops. Gold's reversed. Nice. Lucky. So we got a nice accumulation next. Once we start accumulating, then you want to look for these fair value gaps. Now this isn't me saying we're going to start accumulating right now. You just got to wait for it. It might happen up here, it might happen down here, it might happen here, wherever it is. That's what's next. The accumulation phase. Right. GBP Swiss franc. Yes. I think we just looked at that, didn't we? No, we didn't. You're late. That's all I can say. You're a little bit late here. You might try and get a re-entry again, but it might also play out to be distribution. You should have got in over here. Very, very textbook stuff. Oh, shit, wrong color. Manipulation. Now, this was manipulation from news, so it was a little bit risky. So I can understand if you didn't want to take the trade because of that. Plus, there's not really any liquidity being taken. Going to the 1 hour, the 30-minute maybe. Let's see what the 15 is saying. Let's see the 1 hour. No real candlestick pattern either, so granted, you know, shouldn't have really took an entry. But, you know, in terms of an entry, in terms of trying to catch this move, you're a little bit late. So what I'd wait for is simply just the next accumulation. You know, it's like, I'm trying to come up with a fucking saying. It's like, if in doubt, just wait for the next accumulation. But, you know, it is pretty textbook. Don't try and catch the next move. Like, don't try and catch this move. Just don't miss the next one. Does that make sense? Like, patience. Just patience, really. But yeah, Swiss franc, wait for another accumulation. You've missed your entry. Platinum, wait for that accumulation. You've missed the move. Once we've got that accumulation, you can look to manipulate into one of these fair value gaps. AUD USD, manipulation, look for a candlestick pattern, look for a manipulation, look for accumulation. Bitcoin's reversed, fucking get in. Perfect call, perfect shout. GJ, just wait for that manipulation, either up to here or down to here. But yeah, that's it, guys. Like, you know, there's not really much else to do now. It's literally, as I said, the hardest part about this strategy is probably just the patience. Just patience to wait, take the trade, and execute exactly when it does. You need to have patience and confidence for this strategy. You need to be patient enough to wait for the move without taking any stupid trades. And you need to have the confidence to take the setup once you see it play out, regardless of whatever you might think. You got to be as completely robotic as possible, basically. Just wait for the exact setup. But that's it. Like, you know, as I said, if you're new here, subscribe. Free Discord is the first link in the description. Fast Track Trading is the second link in the description, where you can get a complete full guide on this strategy and, you know, kind of like one-on-one guide by me. Stuff like that. New module for getting funded is going to be out on that soon, because I wanted to kind of drip feed it because we had, you know, I started this in like April, maybe just the end of April, May is when I started the course. So we've had members now for a good 5 months. So now the members from the start, like Rodrigo from Abla, all the few people from the start, I'm going to be releasing a funded module, which will teach you how to get funded very, very soon. I'm aiming for around about December time and pairing it with the rebuild that's going to be coming for that course. But yeah, check out the fast track trading, guys. Second in the description. Check out the free Discord. First link in the description. If you want a free course, there's one in the free Discord. So join the free Discord, get the free course, go through the free course, ask me any questions you've got, as always. And that's literally it, guys. I've got nothing else to say. As I said, patience. Just wait for that setup to occur. Once the setup has occurred, have the confidence to take the trade, and then we can go from there. But other than that, guys, I am done for the day. I'm going to sit here, monitor the charts in the background. I'm not going to stare at them like some degen, but they'll be on in the background. I'll update you with any trades, any ideas, anything like that in the free Discord, so make sure you're there. But yeah, I'm live every day, 2:30 p.m. BST on YouTube every weekday, unless it's a bank holiday for UK or America. So yeah, that's it, guys. That's it from me. Got nothing else to share. Hope you enjoyed the stream. If you did, please hit the like button, all that shit, you know what I'm saying, and subscribe. And I'll see you guys tomorrow, 2:30 p.m. BST, for the same stream at the same